Guys, we urgently need to talk about AMC stock. I had to do it. I had to sell everything. I had to sell AMC, had to sell GameStop, had to sell all my options. It's just getting to that point. I'm just playing. April Fools, guys. It's also my birthday, so I gotta give you guys shit. But nonetheless, let's get into this video because the picture here does not look all too bad relative to what some people are going to say. We're following this trend line, so I really want to see if we get rejected off of that, if we do come down by the end of the day and close under that trend line, or if we retrace back up to the upside. We're slightly under the 100-day moving average, but that's pretty normal for us. We did that yesterday, and we did close above that. So if we can close above that again, that's going to be really your solid sign. That's at $23.92 per share. Those are the key levels that I am going to be watching. You guys can see this overall trend line. It's picture perfect over the last 10 trading days or so. So I'm going to be paying very close attention to that. Make sure you guys tune in later on today so we can go over exactly how the technical setup looks to close out the week. But I also want to tell you guys that we're only down 4.38% as of right now. Things could change. Maybe by the time you guys see this video, we're a lot higher or a lot lower. It's Friday, and it's the first day of Q2, so I really want to see how we close, if people rush to sell out or rush to buy back in. The GameStop stock dividend hype obviously did not carry momentum through the first couple hours, about 2 hours of trading here so far, but it is possible that that does come back to people's attention. Even GameStop is only up about 3%, and we were up 16% last night in after hours. So, be on the lookout for that. That can be one of those things where it just comes back to people's attention once more clarity on that is actually involved, because at the same time, you don't know how much the dividend is going to be. Is it going to be 0.20% or 0.20 of one share? Is that your dividend that you'll get? 1/5 of a share? Is it going to be 1/4 of a share? Is it going to be half a share? Is it going to be one share? That's going to make a big difference because the short sellers, they have to pay out that dividend. So if it's a sizable amount, if they shorted, say, 10 million shares, and for every 5 shares you get one, you're going to have to pay out thousands of shares worth, and GameStop shares are not cheap. Also, that will have some effect as well on AMC stock. So I'm not going to totally discount that as potential hype or momentum that it's gone. I think it's really on the back burner due to the news and data that we did get today. So let's go ahead and take a look at the Ortex data to get a picture of what is actually going on today. And I will tell you right now, lots of shorting activity that is going on, as well as the option volume is dying down just a little bit, which for the first 2 hours of Q2, it's not surprising, guys. People are really going to take a little bit of a breather here. Markets are coming down a little bit as well, and people are not just going to flood into stock right now. That's going to be my perception of this. People really dumped out of stock at the end of the trading day yesterday. So you might need to see a second before people fully do reposition. When you're talking about billions of dollars, it's not as easy as, buying a stock on Webull or Robinhood. There's a lot more thought process that has to go into it. But I do think AMC will have a net benefit from this portfolio rebalancing that we are going to see. Nonetheless, for AMC, 13 orders totaling $3.37 million for the day so far. Positive order value of 57%. As far as the shorts are concerned, you are seeing return shares of 1.6 million, borrowed shares of 2.11 million. So that is a net short of 510.7 thousand shares for the day. That's the most beautiful thing about this, is shorts could slowly cover if they want to. They could totally avoid the MOAS. They could avoid the next leg up. Are they going to do that? Absolutely not. It's a big egotistical battle, and coming from somebody like myself that has been invested in the markets for 5 years now, that has seen all of these retail waves come and go. I've seen the EV bust. I've seen the cannabis stocks back in 2017 come and go. Shorts getting squeezed out of different positions. Even back then, go look at some of those cannabis stock charts. I mean, Tilray was a $200, $300 stock at one point. So, you know, I've seen these things come and go, and I've seen responsible shorts before, that stocks that had a high short interest that they've kind of slowly gotten out of without causing a massive short squeeze, or once a squeeze or a leg up happens, the short interest will come down dramatically, like shorts have actually covered. You don't see that with AMC, and that's, I guess, the best thing about all of this. Eventually they will be squeezed out of their positions, just no way to go around that. And AMC kind of has a revolving line of catalysts that are coming. As AMC does make more acquisitions and purchases more stock in companies, they're going to diversify themselves, so they're going to make income, and that's fundamentally a good thing for the business. But it's also going to be hype catalyst after hype catalyst after hype catalyst. So it's going to be very exciting in that realm. But as far as the short interest of free float, you're looking at 20.62%. Current shares that are sold short of 106.25 million. Short interest change of 0.21%, and cost bar max at about 3.94%. Utilization of 100%, and the days to cover at 2.44. So the situation actually looks very, very good as far as I am concerned. Now, something that you guys probably want to be made aware about is the 5 and 30 year yield curve has inverted deeper today. Let's go ahead and find exactly where this is. And it says US 5 to 30 year yield curve inversion deepens to 10 basis points. So that's starting to get even worse, a more telltale sign of a recession to come, as well as the 2 and 10 year curve inverts for first time since 2007, or 2 to 30 year, as well as the 2 to 10 yield curve has deepened to about 0.05% inverted as well. So it's very clear we're going to get a recession sometime here in the next 1 to 2 years. That's usually the time frame, but the returns during the last 4 or 5 yield curve inversions before recession are on average about 28%. So the markets, they kind of look at that like, hey, let's buy the markets, let's buy shit up, let's put us into a bubble, and then you finally get that recession. So you actually make the most in the stock market, comparatively to your average 7% yield every single year. You actually make the most before a recession hits. That's like the real estate bubble in 08. Like, you wanted to buy real estate when the yield curve inverted in 2006, or put yourself in a good position and then try to get out before shit actually hit the fan. That's how markets expect it to go, and that's how I would expect it to go. At the same time, I know a lot of us, myself included, have a lot of growth stocks in their portfolios, and believe it or not, when a recession happens, or there's fears of a recession and the economy is not growing anymore, because that's what a recession is, 2 quarters of declining growth. Now, they can be small declines or they can be large declines. You never really know. But when there's no growth in the economy, investors look for growth stocks to give them some level of growth. So it's actually somewhat of a positive for a lot of your growth stocks, as long as you don't go into a huge recession. And I don't really see that as being the case, but I'm always early to this stuff. I called this out 6 months ago. So if you guys are subscribed to the channel, you already knew this was coming. Nonetheless, for the data that did come out today, let's go ahead and take a look at that one. And it says unemployment rate came in at 3.6%, so better than expected. And the non-farm payrolls came in at 431,000, so a little bit less than expected. Maybe that's why you're seeing a little bit of weakness in the markets today. It's hard to tell. You have talks between Russia and Ukraine. We really haven't got too much news off of those today. I imagine it's a lot of the same old, and there is that humanitarian corridor opening up in Mariupol. So we'll see if any new headlines come out over the weekend. I'm sure it will, and that's what is really going to move the markets coming next week. The Russian ruble makes almost full recovery despite Western sanctions at pre-invasion levels, which is crazy. Their currency went up 100%. That's like you having money in your bank account and you lost 100% in value, and now it's all back. It's moving like a meme stock. Kind of ridiculous. But it does say Goldman Sachs says broad economic model shows almost no chance of recession in next 12 months. I don't know, guys. Nobody ever seems to have it right. You really got to look to YouTube channels like mine to actually get an honest perspective and some honest due diligence. But nonetheless, that's really it as far as news, and that data was a good and a bad thing. Let's go look at the Fed rate monitor tool, and there we have it. The probability of a 0.5% rate hike is now at 73.8%. The probability for a 0.25% rate hike is at 26.2%. So you're seeing that probability going up yet again. I don't know when the markets will pay attention to this, but eventually the markets will pay attention to this again, and they will start freaking out. Like I have said, I don't trust this rally. I basically said that at the top of this rally just because nothing has gotten better. It's actually gotten worse. China locking down over there. Hong Kong suspending Chinese stocks. The Evergrande situation over in China with property developers has not gotten any better. It's actually gotten a lot worse. Higher inflation now, and the markets were not pricing in a 0.5% rate hike at the last Fed meeting. Now they are, and the markets just don't care about it. Maybe they just don't care anymore, or maybe they're really not paying attention to it right now. And Psaki plans to depart White House for MSNBC soon, CNN says. Psaki has not officially signed a contract with the network, says CNN. Interesting. Okay, let's get into some of the technical analysis that you guys need to know. Just FYI, the max pain is at $23 per share by the end of the day today, so we'll see exactly how that does play out. But as far as the technical analysis is concerned, let's go ahead and find the AMC chart. The whole time the markets were falling, AMC was actually holding up quite well. So like I said, you got to watch this 100-day moving average. We found support right there, and that's going to be the key level to watch, as well as this trend line that we have right now. We're retracing a little bit off the bottom, kind of like we did yesterday, and that's probably what will happen once you get more stability, I guess, call it bullishness in the markets throughout the day, which I think you will. As long as we hold up at this trend line or above this trend line or above the 100-day moving average, I can't say the bullish rally is intact. And even if we don't, not going to be a good thing. But if we come back down to this level at about 21, you could still get that next move up, because look at the massive gain we still have had up till $21, right? It's been a phenomenal ride. Up 7%, 5%, up 4%. 0.38%, 15%, 13%, 0.05%. That would be a nice return still. So even if we do come down, nothing to worry about. It's just going to make it a little bit harder to break out again above these key levels like this 100-day moving average. But overall, the situation does not look all too bad. The RSI is at 58.89, more of a normal level, not really on that overbought, not really on that oversold side. And the MACD is bullish still, even though we've been coming down. The MACD is not quite acted in the same way or looked as pessimistic. So situation here could be better, could be a whole hell of a lot worse, but the bullish rally, I cannot say, is not intact until those key things do happen. So that is pretty much going to be all for this video. Watch to see by the end of the day. You guys definitely want to watch that 4 o'clock video so we can go over everything that has taken place after this video is published. So thank you guys for watching. Do appreciate you guys. Get yourself those free stocks down below in the description with Webull, Moomoo, and Public. When you sign up for Moomoo, deposit $1, you will get 3 free stocks, as well as an additional free share of NEO upon your deposit clearing, and NEO is up about 10% today. Also a trade we hit in the buy and sell alerts yesterday, up over 100% today. So check that out if you guys want to be a part of that and get access to all of my trades in real time. Link for that in the pinned comment, as well as the link to follow me on Twitter. So thank you guys for tuning in. Again, I think I said that 3 times. April Fools. I hope you guys aren't too mad about that joke. I really don't care though. April Fools, and I will see you in the next one.